I think it's absolutely right that, of course, emerging markets as an asset class overall actually have done rather well in February. So it does suggest that there's more levity, less bearishness in the market. However, compared to mature markets overall, they have still underperformed. So this general trend, which was very dominant in 2013, has sort of continued into 2014, which is that globally, most investors continue to make more money focusing on mature markets like the United States, to some degree also Europe, than they are in the emerging market space. That all said, I think what is absolutely pivotal right now is, of course, to watch what is going to happen in China, in particular on the currency, in the run-up to the MPC meeting that will take place at the end of this month and the beginning of next month. Yes. I mean, here, at the end of the day, if you look at the global stockpile of cash, cash is still, there's still huge amounts of cash out there that can be or are being deployed. And so that's why you have this flow also into, high yield bonds. But most of it is really going still into mature markets. And one market that stands out there is Japan. Japan has enjoyed very, very considerable flows. On the emerging markets side, the large outflows that were very prevalent last year, these seem to be sort of winding down. So you see that especially in sort of Southeast Asia markets like Thailand. It seems that global investors have really sort of they've completed that process of winding down, and so the next move is actually to step back into these markets. Yes, I think you have, of course, in a number of these countries, like India obviously included, very important elections which are coming up. So I think broadly speaking, what has happened is that most international investors have sold down their emerging market positions over the course of 2013, and are now looking at individual countries for catalysts, for reasons to go back in. I think what is very healthy is actually we begin to see more differentiation take place in emerging markets. Countries that have been more proactive in terms of addressing their imbalances, or actually allowing their imbalances to be corrected or adjusted through the currency movements, are now sort of being reappraised, and people are also realizing that actually, at least in terms of fundamental growth, for example, a country like Indonesia, things don't look that bad. So there is this reassessment that is taking place. And as I said before, what I think is very healthy is that markets are no longer treating all emerging markets the same. That differentiation is very important, and that will set the stage for individual countries like India, like Indonesia, among others, to be able to once again draw in more strong interest into their markets. I think as we enter into sort of spring and early summer.